click that link below. Support our sponsor, Protect America. That's protectamerica.com. There's two things that help me to sleep better at night. One are the loaded firearms I keep underneath my bed that I will use to defend myself and my family, God willing, if need be, God forbid. And the second item is my Protect America home security system that protects me and protects my family. Protect America, click that link below, check them out, click it now.
Crisis will happen.
The biggest fiscal stimulus we have ever seen.
And that'll solve the problem. We're in the midst of a serious financial crisis, and the federal government is responding with decisive action. We've boosted confidence in money markets.
It should be clear, it should be self-evident that our entire economic system and the stock market in general is rigged.
Despite the tragic events of September the 11th, the foundations of our free society remain sound, and I am confident that we will recover and prosper as we have in the past.
They took down the symbols, the financial symbols of America, the twin towers of the world trade.
Today, we've had a national tragedy. 2 airplanes have crashed.
Overall, the U.S. economy appears likely to expand at a moderate pace over the second half of 2007, with growth then strengthening a bit in 2008 to a rate close to the economy's underlying trend.
Banks still have plenty of big guns to fire. They'll fire them when necessary. The worst is over.
Peter, I guess razor blades are in order?
The worst is yet to come. The fundamentals are not sound. They're awful. If the fundamentals were sound, we wouldn't be having these problems.
All right, fair enough. Hey, you get to buy blue chip stocks at discount prices, but our pros say you can do that right now. It's time to get more for your money. Ben, what have you got, my friend?
Well, the financials, as I keep saying, are just super bargains. I particularly like Merrill Lynch, which is an astonishingly well-run company. You know, a couple of days ago it was trading at barely more than 7 times earnings. Financials typically trade at a low PE, but this is a joke. This stock is, they might as well be putting it in cereal boxes and giving it away. That's how cheap it is.
Charles, what do you think of that?
Yeah, I like the financials, too. Merrill isn't my top pick in the group. I think Bear is probably the cheapest, although the riskiest, and some of the others are better. But, you know, the financials are a great place, absolutely.
So what are you doing, Charles?
I, again, like the financials. I like Goldman Sachs. It's like getting Dolce & Gabbana on sale. This is the creme de la creme of Wall Street. It's cheap.
Isn't it still up substantially year over year, though?
It is down, and it's probably actually going to go further, and I think that people should start nibbling at this thing.
Peter, what do you think of that?
Look, stay away from the financials. They're toxic. They're not cheap. They're expensive. You think
Wow.
they're at
Well,
let me finish.
So
Let me finish. You think they're at low PEs. They have no earnings. Their earnings are going to disappear. I remember a year ago.
Their earnings are huge.
Ben, last year when people were last year when people were recommending home builders and they were talking about they're at 5 or 6 times earnings, I said those earnings are fantasy. They're not going to be here.
Fantasy about that.
There's a lot of losses coming up in the future. These financials are going to get hit, and they're going to get hit hard. Don't believe what these forecasts are for future.
No,
it's not. They're going lower.
All right, Peter, I wish we had more time with you. I know you want to continue that expose on Santa Claus.
Good evening. This is an extraordinary period for America's economy. Over the past few weeks, many Americans have felt anxiety about their finances and their future. I understand their worry and their frustration. We've seen triple-digit swings in the stock market. Major financial institutions have teetered on the edge of collapse, and some have failed. As uncertainty has grown, many banks have restricted lending. Credit markets have frozen, and families and businesses have found it harder to borrow money. We are in the midst of a serious financial crisis, and the federal government is responding with decisive action to prevent major investors from intentionally driving down stocks for their own personal gain.
On Wall Street, the stock market shot up again on Wednesday, hovering around 10,000 after the giant bank JP Chase posted its highest profits since the subprime mortgage market collapse. JP Morgan, America's second biggest bank, made $3.59 billion in profit in the 3 months to September, benefiting from a surge in investment banking, which saw off higher losses elsewhere, particularly in consumer loans.
At a stop right here at 45 or 50. I mean, but that's way too much. What is it? Is it 75 then, or what? What'd you say it was 1050 something? 1053, so 90 handles? That's too much.
Meanwhile, Wall Street pay is on record pace once again. Estimates suggest more than $140 billion will be paid out to executives at 23 top Wall Street firms. While for millions of ordinary Americans, this is the year of the pay cut, with reductions hitting their highest level since the Great Depression of the 1930s.
9.5 straight night, 20 straight night, even straight here. Now, guys, 8 halves are trading as well. Once again, guys, they're going to get it at 8 halves straight, 8 even offer, 7 even offer, 6 halves are trading here now, 6 evens are trading, 5 evens are trading here now.
Congressman Royce, thanks for being with us. We appreciate it. I put this question to Congressman Markey because he's getting ready for the oil spill question. What is the biggest question you have on this topic, and what do you want answered?
I'm thinking about an event that happened back in 2002, October 2002. Bear Stearns attempted to make a trade at that point in time of $4 million. They did a trade inadvertently, an errant trade of $4 billion.
We've had a meaningful breakdown in the averages, a meaningful breakdown in all the bellwether companies, and we're clearly going to test the Thursday flash crash lows, which every pundit out there on TV said was artificial, and which I've said time and time again is not artificial. It was a legitimate trade.
A new government report has determined the so-called flash crash was caused by a single trading firm executing a computerized selling program in an already stressed market. An AP source says the firm is Waddell & Reed, based in Overland Park, Kansas.
My administration is working with Congress to address the root cause behind much of the instability in our markets. Financial assets related to home mortgages have lost value during the housing decline, and the banks holding these assets have restricted credit. As a result, our entire economy is in danger. So I propose that the federal government reduce the risk posed by these troubled assets and supply urgently needed money so banks and other financial institutions can avoid collapse and resume lending. This rescue effort is not aimed at preserving any individual company or industry.
In Washington, members of Congress heard the insurance giant AIG had planned to hand out $1.7 billion in bonuses just weeks after the Bush administration had plowed $85 billion into the firm to keep it going.
Wasn't there something seriously out of whack here? This does not make a lot of sense to me.
Predicting the panic of 08, the economic 9/11, and the current economic crisis that we're still in was probably one of the easiest forecasts we've ever made.
This isn't a capitalist society anymore. No, this is a society run by frauds at the top that collude together for their own personal gain.
If you can buy a home with almost nothing down, then you do well if the prices continue to go up. If it goes down, well, then you have an incentive to walk away from it and let the bank have it.
And my question for you is simple. Were you wrong? It would be sure the mic is turned on.
Partially, but let's separate this problem into its component parts.
Can we conclude from what you just said and from what you are seeing that the favorable factors in our economy today may be glimmers of hope, may be harbingers of an economy that's recovering? You've used the words incipient recovery. Do you see a recovery unfolding at this point in time?
Yes, sir. Our expectation is that we'll begin to see growth in the economy, so the end of the technical recession later this year. So we expect to see some growth, not robust growth, but some positive growth later this year. Unfortunately, since the growth rate in the beginning of the process will be lower than potential, we expect unemployment to continue to rise into next year and to come down only slowly. So we will have a weak labor market for some time.
Prices will happen.
The biggest fiscal stimulus we have ever seen. The biggest fiscal stimulus we have ever seen.
And that'll solve the problem.